AMD reported its quarterly results. Revenue grew 34% in the fourth quarter. The company is expecting top line to grow about 32% at the midpoint of its range this quarter. Growth, for the most part, has hovered around this ballpark for the past year. Meanwhile, the chip sector has never been more dynamic, with government regulations and M&A being front and center. I want to bring on someone who has gone deep on this sector. Chris Miller is the author of Chip War. Chris, welcome back to the show. It's great to have you here.
Thanks for having me.
So there's so much that I want to cover with you. We have the AMD news this morning. We, of course, have the H200s, the trade rules, the NVIDIA Grok deal. So we'll see how much of it we can get to. But I want to start with AMD here. I mean, shares are down today because of the earnings. But I am curious from you on what you think of their place in the broader chip story right now and what you make of their competitive positioning.
I think that the challenge that AMD faces is that they're not only competing with NVIDIA, they're also competing with all of the ASIC projects that Meta and Microsoft and Google have in-house. And what we've seen, I think, over the last couple of months is these ASICs are, at least some of them, looking pretty good. Google's TPUs in particular getting a lot of traction, impressive on their specs. And so that is creating a much more crowded market that AMD has to compete in.
Now, the other thing that came up on the call was the trade dynamics with China right now. And AMD is, like NVIDIA, waiting for all sorts of green lights from multiple different parties on getting its chips to customers in China. What do you make of the current state of that dynamic right now? We had some reporting in the last 24 hours from the FT that we're sort of back to a bit of a stalemate here between U.S. and China, even though the U.S. has given a green light. It's more of strategy as opposed to execution right now. And then of course you have China that's waiting to see whether the customers there will get their green light. What do you make of this?
Yeah, I mean, I think we know that the Chinese customers, ByteDance, Alibaba, and others, they want the chips, no doubt about that. They don't have access to domestic alternatives at the scale that they need. The Chinese government, though, is less certain. The Chinese government wants to make sure its companies have the computing resources that they need, but China also wants to build up its own domestic ecosystem to support Huawei and the other companies that are designing AI accelerators. And I think the Chinese government has been going back and forth on how many GPUs it's going to allow in because it wants to make sure that there's plenty of space in the market for Huawei. In the long term, the strategy is to supplant foreign providers of GPUs with Huawei's own domestic production. And then the other uncertainty is indeed in Washington, where there's a debate ongoing as to whether and what volume of H200s should be sold to which customers. And so we've seen a formal green light from the White House, but that just kicked off a security review, which is currently working its way through the U.S. government. I think one of the questions is, what are the customers that you can sell chips to without triggering any concerns about diversion to the Chinese government or Chinese military? And what are the customers that you need to be worried about? And that debate, as I understand, is still ongoing.
One of the questions that we try to get to the heart of on this show is you have the issue that will play out over the next few months, and this decision will go one way or another depending on what week we're talking about. But we're really, what I'm really interested in is the 2-3 year roadmap for how you think this issue plays out. Where do you think it goes on that time horizon?
Well, I think what we know with pretty high confidence over the next couple of years is that China's not going to have the domestic manufacturing capacity to produce the chips that it needs. Right now, best estimates are that the US plus Taiwan are going to produce something like 30 times the number of AI accelerators, quality adjusted, as China is. That's a huge gap, which means that for now, China's reliant on whatever imports it can either smuggle in or get its hands on legally. So I think Chinese tech companies are going to keep trying to buy whatever chips they're allowed to buy from the outside. And then the question is on the Washington side, what are we going to be willing to sell or not sell? And I think here, you've seen the president signal a willingness to sell some, but you've also seen a strong reaction in Congress and elsewhere in Washington that is really cautious about giving China any additional computing resources on the grounds that the more chips China has, the stronger its AI models and the stronger its cloud computing firms are likely to be.
So basically, you're saying that even though this is a story that changes week by week, 3 years from now, you think we'll actually be in the same position where we still have US chips that are better and China trying to catch up, and we still have this dynamic.
Yeah, I mean, the key challenge that China faces is that TSMC is in Taiwan, and China doesn't have anything comparable.
Right.
And so China can't currently make domestically the tools that you need to manufacture advanced chips, especially the lithography tools that ASML is the sole source of. They can't buy those tools because we don't let them. And so China is trying to make advanced chips using second rate equipment, and it's very, very hard to scale up. They've been trying to scale up for a couple of years with some success, but TSMC is scaling up faster, building more fabs, racing forwards on its process technology. And that's how you get this 30-to-1 gap, which is really pretty extraordinary. And it's not something China's going to solve in a couple of years.
And one of the things I wanted to ask you, because you've studied the history of the chip sector so closely, is are there any historical parallels, maybe even outside of chips? I'm thinking about electric vehicles, for example. Are there any historical parallels where China has not had the capacity, the technology initially? Maybe they've come from behind in some ways. I mean, I'm just trying to sort of leave open the possibility that maybe there could be a breakthrough. I don't know.
Yeah. If you look at the sectors where China's done really well and kind of leapfrogged ahead, like EVs being a good example, what you find is that those are spheres where China's technology, you could debate whether a BYD is better or worse than a Tesla, but there's not a clear metric that says one is twice as good. China is certainly very competitive on price, and so if you match quality and are lower on price, you win the market. But in chips, it's different because you got this enormous quality improvement that drives an enormous quantity improvement in computing power. And so no one in the US is buying 4-year-old chips, to say nothing of 8-year-old chips, because they're just so much worse than the cutting edge that a company like NVIDIA can offer. And the need to stay on the cutting edge is just so much more acute in the chip industry, which means that you can't compete simply by getting 80% the quality and being half the price. You got to be 100% the quality to be in the game.
Now, you talked about TSMC, and I want to ask you about their work in the United States and their ambitions to expand here. That has been a long journey for them, and they've gone through a number of challenges. What do you make of the challenges they've had, and what it tells us about where they'll be 2, 3 years from now in the U.S.?
Yeah. I think TSMC is certainly committed to ramping up in the US. They've said publicly that they're going to have something like 25 or 30% of their advanced production in the US by the mid 2030s. That's a real big change from a couple years ago when that number was zero. But it's also true that it's been a complicated journey. This is the first time TSMC's done advanced manufacturing outside of Taiwan. It's had to build up its local workforce, build up its knowledge, and it's confronted both a challenging environment, very different from Taiwan, that's driven higher costs. And so I think we should be optimistic that TSMC is going to build a lot more volume in Arizona, but we should be sober about the cost differentials that I think are going to persist over the long run.
What gives you optimism there?
Look, they've executed. They've already got one plant up and running. They've publicly said the yields, the share of chips they manufacture that work as intended are just as good, if not actually slightly better than in Taiwan. I mean, TSMC, I think, is second to none in terms of their ability to execute. And when they devote themselves to a project like this, I have no doubt they're going to fulfill on it. I think the challenge for the US is just that it's not going to be at the same price point as Taiwan. And so we've got to balance our desire for resilience, which is important, with the cost dynamics.
Now, since the last time we had you on, the big chip deal that we saw was NVIDIA and Grok. And I wonder if you think that deal was offensive or defensive on NVIDIA's part.
I think maybe a bit of both. Certainly, the defensive dynamics are clear, but I think it was notable that just a couple weeks later, it was followed by an announcement of a deal between OpenAI and Cerebras, which is another firm that has inference focused architectures, which speaks to the offensive part that these companies just need more capabilities that are more efficient at inference. And so, for NVIDIA, Grok could deliver some of that as well. And I think these two deals really open up a big new space for inference specific chips, which until recently haven't gotten a whole lot of market traction.
Well, and the third deal that to be clear, I mean, it hasn't. It's been reported to be in the works, and there's rumors about it. We haven't seen any news of it formally, but the other deal that we've been watching is Intel perhaps looking at a company like Samba Nova.
Yep.
And we have documented the fast growth of these chip startups here at the Information for quite a few years now. I wonder if you think we are at a bit of an inflection point where you have these chip startups that are really coming to terms with reality with how big the competition is. And I mean, is this the start of, I don't want to call it the start of the end, but like we're seeing acquisitions. I mean, we've seen this play out time and time again in different industries.
Yeah, I think you see these acquisitions or these kind of interestingly structured deals, I guess, not fully
Right.
acquisitions.
Yeah. Whatever you want to call them.
What you're gonna call them, yeah. We also see new startups in this space raising really substantial sums of money, and so, I would say the venture space seems willing to keep funding, new inference-specific architectures, and so that, either speaks to a realization that even if you get acquired at pretty large dollar amounts, or that the market is so, vast that there's gonna be space for both training-specific and inference-specific chips down the road. And so for now, it seems to me like investors are still willing to make a bet on there being a pathway for the inference specific chips.
Great. Well, Chris, I want to thank you for coming on. It was a great discussion as always. That is Chris Miller, the author of Chip War, here on TITV.